A very warm welcome to each and every investor present here today. Based on popular demand and request by investors, Chief Investment Officer Mr. Sunil Damania will be explaining the probable impact of Silicon Valley Bank crisis on the Indian equity market and what should be your strategy going forward. Towards the end, we'll also be having a Q&A session. You can drop in any queries you have in the Q&A box below the video. Over to you, Mr. Sunil.
Hey, thanks a lot. And the topic is SVB. And as you all know, what's happening right now in the US market, Credit Suisse seems to be creating another scare for the investors. I have been informed that Dow is down by more than 500 points as we speak. And the problem continues. So by the time one problem gets over, we move to another problem. And by the time another problem gets over, something else is coming up. And that's the beauty about the market. When the going is going great, any amount of negative news that will come in, there will not be any impact on the market. It's like a Teflon. The market sentiment is like a Teflon. कुछ भी नेगेटिव न्यूज आएगा उस पर टिकेगा नहीं, चिटकेगा नहीं उसके ऊपर. एग्जैक्टली ऑपोजिट ऑफ टेफ्लॉन इज ए मैग्नेट. कोई भी नेगेटिव आएगा वो चिपक जाएगा मार्केट के सेंटीमेंट में. एंड दैट एग्जैक्टली व्हाट इज हैपनिंग राइट नाउ. आई मस्ट टेल यू दैट it is not an easy market. I must admit that. Why? Because no one has a handle on what's going to happen next. उसको कोई है ही नहीं, क्लू ही नहीं है. Because news flows are coming from anywhere, any place. If you would have asked me 15 days back, will any bank in US will collapse, I would have said no. And everything happened, and I'll show you a chart graph of SVB, how it moved. Till 8th March, there was no, that is last week. कोई तकलीफ ही नहीं था. But see the impact. Someone had said very nicely, it takes many decades to build Rome, and it took only a few minutes or few seconds to destroy Hiroshima and Nagasaki. So I think it takes a lot of time to create a good sentiment, and when the news flow comes, it gets collapsed in no time. And that's what exactly has happened with the SVB. Now the key question that everyone wants to understand. So what I'm going to present in my webinar today is that what happened with SVB. It's very critical to understand. Why? Because you can relate in case something future in happens, you can relate to it what happened. Am I right? And there are a lot of learning that we can have. Number two, is this the Lehman movement of 2008? Number three, what impact it could have on the Indian equity market and Bank Nifty. I must tell you that in 2023 beginning, there was a general consensus that bank stocks will do extremely well. We did not share that optimism. I did not share that optimism. And today, the Bank Nifty is in negative, and unfortunately within the Bank Nifty, not a single bank is in green. Which clearly shows that how sentiment, which was extremely good in the beginning of January 2023, by mid of March, that sentiment has turned from positive to the negative. And the question that comes, does it make sense to buy more of the banking stocks? And I'll try to cover that in my presentation. So this is what the flow I would be having, but before that, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for the future performance. And I must also add one more line. This, in case if we talk about stock specific, that stock specific would pertain only to the Markets Mojo website, not to the Mojo Infinity. With this, let's try to. So what was Silicon Valley Bank was all about? This is not a new bank. Okay, this bank was in existence in 1983 when the India won the first World Cup in the cricket. 1983. So it's in the existence for more than 40 years. So while someone was asking me other day, one of the journal, ये तो नया bank होगा because everyone thought it's basically giving funding to the startups and so and so. Is this the new age bank? No, the answer is no. It has a history of 40 years. It's been in the bank system for 4 decades. It's not that. It was the 16th largest bank in the United States. And their service included startup banking, venture funding, and the corporate banking. Now what has happened in this bank is that, so let me give you this with an example. This had a very pure vanilla business. And you please listen to me very carefully because this will also help you to understand when you analyze some of the Indian banks. Silicon Valley Bank has a very pure vanilla business. It did not have investment banking, that is IB we call it. It did not have any trading income. It did not have any wealth management. And hence it became more vulnerable to the pure vanilla business of NIM. Now what happened? Let's try to understand how and see, this one thing I've always observed, and I think it's a very critical. I must want everyone you to please take a note of it. Jot down in a piece of paper, jot down in your laptop or your mobile phone the cause and effect. And many times we believe and we think that cause and effect is instant. नहीं होता ऐसा. In the business, in the stock market, cause and effect will have a delayed impact. We call it lag impact. And sometimes the good time basically create the problem for the future. And that's exactly what has happened with the SVB, Silicon Valley Bank. So what happens? So we all know that, COVID broke out in March 2020. Tech sector performed extremely well. VCs were in a great demand. They wanted to give more money to the private equity and VC wanted to give money to the tech. And that created a lot of excess liquidity with the complete tech companies. Now, where would they park the funds? So they parked the funds with the Silicon Valley Bank. So that has been the problem. कभी-कभी अच्छी चीज भी problem बन जाती है हमारा, right? And that's exactly what happened with SVB. So now, since SVB got too much money, you can imagine 74 billion जो था उसका 198 billion हो गया 2 साल में उसका deposits. So growth in deposit happened so quickly, it had to park that funds where? Where would it park the funds? तो उसने क्या किया? They invested in long-term bond investment. Government का bond very safe. And now the question that comes to mind, अगर जो safe चीज है वहाँ पे कैसे risk हो सकता है? So many of you may not be aware, but the safest of the safe and bond investment could also create a problem. Why? Those who understand the rate of interest and the bond value will understand what I'm trying to say. So when the rate of interest goes up, the value of the bond decreases. Are you getting what I'm trying to say? It's inversely proportionate. The yield and the price is inversely proportionate. So SVB, Silicon Valley Bank, this thought that rate of interest will remain benign in the United States. And hence, they invested very heavily जो पैसा deposit में आया, and there was nothing wrong. So if you ask me, on the face of it, there was nothing wrong as such. Why? आपका पैसा आया है, आपने उसको safe. What else could be the unsafe, other than the treasury bond of United States? But that did carry the risk when the rate of interest started moving up. Why the rate of interest started going up? Because the inflation started surging extremely high. And since the inflation started surging extremely high, the bond that you are holding with the low yield, low coupon rate, value of that started declining very significantly. And once the value starts declining very significantly, it does impact the value of the bond that you are holding in this. As per one estimate, as on 31st December 2022, $620 billion loss is there on the bond that banks are holding. It would have further gone up. Why? For the simple reason, Fed did hike rate of interest on the first Feb, and most probably one more rate hike on 22nd March 2022. Now, since Fed started increasing the rate of interest, the value of the bond. So if you are finding a little technical, please ask me. I'll try to explain one more in my question answer. The value of the bond started declining. Am I right? So just to give an example, if to draw something very quickly. So when the rate of interest goes up, this is rate of interest, ROI, the value of the bond, please pardon me, will start declining. Am I right? Please pardon me for my handwriting, very bad handwriting, worse than a doctor. Okay, that's what happens. And that's exactly what happened with the SVB holding value. Now let's fast forward. The problem kabhi hua tha started when the technology company were getting a lot of VC funds. They started doing well in COVID time. पैसा ज़्यादा आया, पैसा उन्होंने बैंक में रखा, बैंक ने रखा long term government bond में, and when the rate of interest started increasing, the ripple effect happened in 2023. So what happened? On 8th March, SVB wanted to create, and I must tell you one more thing which not many people are aware. Sometimes some people are very critical to the organization. And what was very critical for this organization was that this bank did not have a chief risk officer from April 2022 till January 2023. Had there been a chief risk officer, so the previous chief risk officer design, they did not thought enough to recruit new one. In a hindsight, I believe had this chief risk officer been appointed, this problem would have been mitigated, if not completely avoided. Now, they wanted to create liquidity. There's one more thing which I think this bank made a mistake, and I think that's also a lot of blame should go to CEO of the company. Now, CEO of the company, in a way, sometimes we talk about transparency and other things. Am I right? So what happened? This bank CEO, without realizing the impact, went on the board and saying that Greg Becker, he went on and said that yes, we sold some long-term bond with the loss of 1.8 billion. At the same time, company to create liquidity wanted to sell its own equity shares of $225 billion, and one of the big investors that was likely to invest in the private equity firm called General Atlantic. That did not happen. So दो चीज एक ही दिन को हुआ, 8th March को. क्या हुआ? उनका जो सेल करना था वो नहीं हुआ 2.25 billion का. At the same time, company disclosed that they have been, to create liquidity, they sold certain long-term bonds and incurred a loss of 1.8 billion. दो चीज एक साथ हुई. 8th March. 8th March was Wednesday. This news came in the market on 9th March, and 9th March, there was a rush to the bank. And because of digital now, it's easy to transfer money from one bank to another, am I right? On the 9th March, which is the Thursday, there was a crazy rush to take money out of the bank, deposit that you have put in. 42 billion got withdrawn. 42 billion. Now you can imagine a bank having a size which is about 160, 170 billion, and suddenly you see 45 billion getting out of the bank, does creates a lot of problems. This can happen to the soundest of the soundest bank in the world. I don't know how many people remember somewhere in 2009, 2010, there was a clear-cut rush on the ICICI Bank, with the rumor that it can collapse, and a lot of people were queuing up. Now, when that kind of a situation happens, the soundest of the soundest bank can collapse unless government, RBI took remedial measures, gave them a lot of funds. They came out and they said these are all rumors, don't believe on those rumors. And people, this has happened. That exactly happened, if that's very recent, it happened with Yes Bank, somewhere in 2019 or 2020, if I'm not able to recollect, I think 2020. Now, sudden this 42 billion withdrawal created mini panic. Bank did not have the funds. In fact, they went $1 billion negative. इतना पैसा कौन रखता है अपने पास एक साथ? It was a completely assets liability mismatch. And one thing you must always remember, one thing which I always realize when I look at NBFC and banks is assets liability mismatch. The very big danger, and that also applies to some of the Indian banks also. What they do, they borrow money for the short term, but they lend money for the long term. Give you a classical example. जब आप अपना पैसा रखते हो savings and current account, that's a short term money. Anytime you can ask for money. But if they use that money to give 20 years ka housing loan, what happens? Assets liability mismatch ho gaya na. So there is a very prudent, they say, your short-term assets should be matched with short-term liability and vice versa. And same applies to the long-term. Best of the best institute in the world have collapsed because of assets liability mismatch. When you try to finance a long-term assets with the short-term liability, आपको problem होना ही है. आप चाहे हो ना चाहो, लेकिन problem होना है. वो आज आएगा या कल आएगा. And due to that, on 10th March, bank was put under receivership. And in fact, stock crashed so much that it has been the trading has been suspended. So problem that the seed of the problem got planted during COVID time. 2022 was the first sign the things started deteriorating. Why? Because Fed started hiking the rate of interest. But the things unfolded, and 3 दिन में 8th, 9th and 10th March, the bank collapsed. बोलते हैं ना हार्ट अटैक आता है ना, and you can't this. That's what exactly has happened to the SVB bank. Now there is a two things. People do talk about is it Lehman Brothers or not. There is nothing. I'll come to Lehman also. But before this, another bank which got collapsed, which is of a larger size, was Washington Mutual. I don't know how many people remember also that, because at that point of time, people were all talking about Bear Stearns and Lehman. No one talked about Washington Mutual. That's another bank which got collapsed, the big bank. There are many banks which get collapsed in the history of US. This is not the first time. In fact, in 2009 and 2010, in 2 years only, almost 300 banks collapsed. 300 banks. But what are we talking about in 2000? Only 2 banks. But Washington Mutual was very, very big bank. And hence I'm talking about that. And look at the similarity between now Washington Mutual and the Silicon Valley Bank. Assets 309 billion, 209 billion, almost two-thirds the size. 24% of the deposit are uninsured. At that point of time, FDIC, in India, I think we have 1 lakh or 2.5 lakh, which so that deposit is guaranteed by the, in case of the bank default, you will still get that money. Only 24% deposit were uninsured. That is 1 lakh. Here in this case, 89% uninsured, despite the limit increase from 1 lakh to 2 lakh and a half lakh, this one. That Washington Mutual was more focused on the retail banking and mortgage. Mortgage was another reason, because we all know that was subprime crisis that happened, it created. For Silicon Valley, it was rate hike, creating liquidity issues, assets liability mismatch, and resulted into this one. So while Washington Mutual failed because of mortgage related problem, Silicon Valley collapsed because of assets liability mismatch, and their investment into too safe assets for a longer period of time, longer duration, this one created problem for that. Two leading banks of the US of 2008 and 2023, that happened, the reasons has been different. Look at Lehman Brothers. Lehman Brothers was not a bank. It was an investment banker. It was not a retail bank or wholesale bank, am I right? They basically didn't bought that. So, like, just to give an example, if I'm just giving an example, SBI is a bank, am I right? But JM Financial is an investment banker. That's not a bank, am I right? It was the fourth largest investment banker at that time, okay, with 635 billion asset size. They took too much risk in the subprime mortgage, and when the subprime mortgage crisis happened, it collapsed. Here, Silicon Valley invested not in the risky assets. See the difference. Lehman Brothers took too much risk. Yeah, they bought safe long-term bonds and still got bust. So the reason I'm trying to explain you is that there could be two different reasons, and yet the result could be very similar. And that's what happened with this one. So that's this one. Now look at the price movement. 230, this is SVB. On close of 2022, it went to $333 on 2nd Feb 2023. 29th January, that is the end of this one, 283. Kuch problem nahi. 13th Feb, 17th March, sorry, I stand here 6th March, this is 6th March, sorry, look at this way. 6th March, 283, no problem. 7th March, no problem. 8th March also no problem. That is, remember, you must remember, 8th March was a Wednesday. No problem. On Thursday, on 9th March, it fell down from $268 to $106. And on Friday, khel khatam. 268, 106, 0. How many days it took? 2 days. Am I right? And that's the danger you run into when you don't know and this is I call unknown risk. I must give you also this, we have seen something happening with DHFL. On single day, the script fell by 50%. Of course, it's now been delisted now. It has happened in the past, so you people can relate to it, okay? The probability of this happening is very high with two sets of example. One, banks and NBFCs, and another when there is a history of corporate governance. If that happens, the market will be in a very ruthless mode to take down all the gain from the script. And hence we keep saying that when you invest in the market, invest in the good quality manage. And that good quality manage also applies to the banks and NBFCs also, and it applies to the non-finance companies also. See, sometimes some company will fall. It will not become zero. Am I right? Because the business mein risk hota hai. You end up getting a wrong company, the wrong value, so that's fine. But to become zero, it happens only when there's a corporate governance issue or it happens with the, and of course both in banks also it's corporate. See, यहाँ पे तो corporate loans का issue भी नहीं था. On the contrary, I must tell you that Greg Becker was the very, very honest and very transparent. But sometimes your transparency and honesty also needs a timing right. And of course, the CEO did apologize to all the employees. The kind of timing, he was a little wrong in terms of timing, and he did that. So that's what has happened with the bank. Now, has it happened in the first time in the US history? Answer is no. Has it happened before Lehman crisis? Answer is yes. But the difference is that the size is very similar. So, in 2001 also, every year you see one or two banks are always getting collapsed in US. वो बड़ी चीज़ नहीं है वहाँ पे. Okay, it's a free capitalist economy. It happens. In 2001, 4 banks collapsed, but total assets was only 2.4 billion. In 2004, 4 banks collapsed, but less than 1. Nothing happened 2005, 2006, but in 2007, 3. But the problem really happened in 2008. 25 banks collapsed, 373.6 billion total assets. So size was really bank that made an impact. And today as we speak, in 2003, 319. Otherwise, if you look at the values are very small and did not create a panic kind of a situation. But remember what happened in 2008. The repercussions were there in 2009, 2010, 2011, 2012, 2013. The value was declining. The reason I am saying this data, do not expect that things are going to be hunky-dory. I'm not going to create scare in you. I'm not going to create panic. I just want to make you understand the reality. In the past, the repercussions were there. उसके पहले कभी we have not seen double digit में the total assets bank in double digit. Am I right? If you look at all the data, they were all in single digit total assets. But 2008 started the problem. 2009 triple digit. 2010 very closer to triple digit, 96.5 billion. It came down in 2011. So it's not going to happen that don't expect that things are going to become hunky-dory in no time. No, it's not going to happen. Let's be very practical about it. Let's look at what happened in 2008. How long it takes US banks to recover? Because history sometimes gives a good indicator what should we look forward to. And if you look at the United States, the problem that started in 2008, it took time till 2010 to come back to the same kind of a net income that they were reporting before the crisis. So it almost took near about 2 years for banks to come out of this crisis in the US. Okay, problem was more with the smaller banks, and we do expect this will become more for the smaller banks than this one. And overall, the bank could come out by fully recovered only by 2013. So 5 साल लग गए to recover from that. Eventually, Lehman Brothers, Barclay bought US business for $250 million, and Nomura paid $525 million for the Asian and European operations. And JP Morgan, that Washington Mutual that I was talking about, another bank before SVB collapse, was Washington Mutual, which was bought by JP Morgan in 2008 for $1.9 billion. So the reason I'm saying so, there is a high probability that this bank will also get sold out, that SVB. But nothing will be available to the shareholders. That money will be used to repay the depositors and meet the liability. How did the bank Nifty recover at that point of time? If you see, it did collapse. But of course, it bounced back. So by May 2009, it recovered in 9 months. To look at the same level it has seen by September 2008. September 2008, the level which was there, it got recovered by May 2009. So almost 8 months we could recoup that September 2008 levels. But of course, it took some time. If you look at it, the peak that was happened, it took some time, which happened somewhere by 2010-11, those things are lag gaye, even to Bank Nifty, to recover the peak which was there before the Lehman crisis. So what now, the question that comes to our mind, what could be the impact on the Indian bank and equities? Fortunately, I must tell you, RBI has done a very good job. It has completely good handle on Indian banking system. Having said that, we do believe there could be a potential problem with bank or NBFCs because we don't know how many people are doing evergreening. We don't know what happening. Classical example has been Yes Bank episode, not in a very far away. We had seen this problem happening in 2020. That can happen. So there could be a possibility. I'm not saying it's going to happen. That could be a possibility. And hence, and at the same time, while that happens or not, remember the sentiment is a casualty. Whether we like it or not, people are going to be very, very cautious. Why? Because you don't know what can come. We recently said Adani episode in the month of Jan. Now this episode of SVB coming up. There is no corporate governance issue. Again, I must tell you that from SVB. But this episode coming, impacting the sentiment. And my experience tells me कि कोई चीज़ जब बिगड़ती है वो थोड़ा ज़्यादा बिगड़ती है before it start recovering. You know, when there is an earthquake, we do have aftershocks of that earthquake. And something similar is going to happen. So, while the long-term story does not look very bad, short-term, I think market is going to remain little choppy. Another thing is that we don't know किसका connection किधर होता है. The cause and effect, you know, sometimes we know the cause, but effect comes after some time. It happened with SVB. Something similar can happen with this. Right now we know the problem, but because of SVB, where all it can do damage, we have no idea. And this can all come out of a surprise to everyone. And that's the big danger that we need to all be very, very mindful of. Please don't be in the impression that SVB episode is over and there will not be an aftershock. There will be aftershock. And hence, market is going to remain choppy whether you like it or not. Why? It's a function of news flow. कभी अच्छे न्यूज़ आएंगे तो मार्केट ऊपर जाएगा, कभी नेगेटिव न्यूज़ आएंगे तो मार्केट नीचे जाएगा. But market is not going to settle down at one level. It's going to remain volatile because I do expect news to remain both positive and the negative. And that's why I'm talking about the Indian market. One good thing is that Indian economy is much stronger than what it was there in 2008. India Inc. balance sheet is not leverage. While one on India Inc. balance sheet is not leverage, unfortunately retail investors are leverage. When I say retail investors, not retail equity investors, consumers are or retail loans are leverage. People have gone for EMI, people have gone for housing loan, people have gone for unsecured loans. And I think that could create some amount of a problem for those banks which have given too much unsecured loans. Remember I was talking about SVB did not have investment banking and wealth management fees or something. Many banks don't have that in India also. That can give a cushion to your income. So unfortunately, fortunately we have a economy is very, very strong, and that's a one good thing. But that having said that, not that all banks and NBFCs are on an equal strong footing. That's what my sense is that. And hence be careful with the banks, all the NBFCs that we are getting into, be careful of what we are buying into. Put highest importance on the corporate governance. Look at very minutely the management commentary, the quality of loans that they would have given, to be very, very careful. Another positive fallout, and that's what the positive I'm saying so, because before this SVB episode coming to the light, the US was talking about 50 bips rate hike. Now, ये इतना हिला दिया है financial systems को SVB ने in the US. Now there is a expectation. They now that Fed will do only 25 bips rate hike. Second thing, again the discussions has come back that Fed may do the rate cut in 2023. पहले वो था ही नहीं. Before 8th March, no one was talking about 50 bips rate. No one talking about 50. Everyone talking about 50 bips rate hike. And rate cut was ruled out in 2023. So that's one thing has happened. At the same time, if you happen to know, CII as well as many corporates have asked even RBI not to hike interest rate further. But I do expect RBI to hike one more rate hike. That's what my sense is that. I do expect, please note down, I do expect banks to underperform. Why? Because investor psych right now towards bank stocks will remain little challenge. And hence, they would not be comfortable paying the kind of premium they were willing to pay premium previously. So be careful with the bank stocks, be careful with the NBFC stocks. There, the volatility could remain little high. And based on the news, you could see the price movement little higher. So if you are not a very, risk appetite is not high, be very, very careful. Follow Markets Mojo bank stocks in a very disciplined manner. Follow Markets Mojo NBFC stocks in a very disciplined manner. Anything you are holding in your personal portfolio is not in sync with the Markets Mojo's rating, please do not take your human calls. Please follow our score in a very disciplined manner and take a call on that. With this, I must give you data how Indian Nifty banks have performed post 9th March. And as you can see, each and every Nifty bank stock has declined. Each and every, someone going down by double digits. 11% almost, IndusInd Bank. Of course, IndusInd Bank also has a reason because Suman Katpatlea. Sorry, I'm pronouncing the surname wrong. Please pardon me for that. Extension has been done only for 2 years and not 3 years, and that's one reason. But banks like Bandhan Bank down by 9%, State Bank of India down by almost 7%, Bank of Baroda, AU Small Finance, Punjab National Bank, they have fallen much severely as compared to other banks, but they are all in red. With this, let's open the floor for question answer. Over to you, Jason.
Okay, I can see a lot of investors actually putting this in the chat box. This one by Shriram. He says crude oil is now below $70. Is there any issue with this?
So when the crude goes below $70, it's a substantial decline. There could be two. One reason is that it's good for a country like India. Why? Because we import crude. But at the same time, it could also mean that global economy is slowing down, and that is so. There could be repercussions on that. So we need to wait and watch whether it remains below $70. How long does it remain? If it remains for a longer period, I think market that does mean that economic activity across the world seems to be taken a beating. And if that is so, two things. One is that it's a positive and negative. One is that if the economy slows down, the Fed is not going to hike rate of interest, but they will start lowering. But at the same time, economic activity coming down is not a great news. And then market will look at the pros and cons and will try to give weightage, whether how much weightage we should go to the pro and how much weightage we should to give it to the con, and then decide what needs to be done. So right now, whether it remains $70 below $70 or not, for a sustained period of time, we need to wait and watch. But if it remains below $70, remember one thing, inflation will come down significantly.
Okay, this next question by Mr. Karthikeyan. Which IT companies will be directly impacted by the US bank failures?
So I don't know how many, who has got what exposure to Credit Suisse, and if at all something has going to happen to the Credit Suisse or not. But I think banking and finance do have a lot of exposure to the IT. IT sector do have a lot of exposure to banks and finance in the US. There's one segment which was showing little softness. If you remember the commentary of many IT companies, they were showing some amount of softness. So there's one danger that we need to be remember when you look at the IT companies is that what kind of exposure. So I don't have the daily data available with me, how much exposure TCS has, how much exposure to the finance as a vertical, but they do have significant portion, am I right? So one that has a high exposure to the banks and finance, I think they are more susceptible, more vulnerable to the loss of revenue as compared to someone who doesn't have. But I think it's a good point you suggested. I think we should cover this, and I'll ask my team to compile that thing to showcase you. Maybe when I come, maybe tomorrow or so, I'll get the data on which company, IT companies, are exposure to the finance as a part of their total revenue.
Okay, moving on to this next particular question. Thanks for the thoughtful presentation. The coal price has come down substantially. Though the coal demand is high in India, could you give us suggestions on Coal India?
I think our score on Coal India continues to remain buy, if my memory serves me right. Just go with the score that is available on the side and take a call. You are right, sir. See, in fact, I was reading that there could be a power shortage in India in the summer month. Why? Because this time summer is going to be more severe than historically it has been. And in the Ministry of Power also has sounded this one, okay, power demand is going to be very, very high. And power demand is high, it would call for more coal demand, am I right? Because that's the way you can do that. So that is good for the player like Coal India. I think the score of Coal India is buy, if my memory serves me right. So please follow that and take a call on that. Coal India is a strong buy, yeah.
Okay, question by Tanmay. All banks are having strong, decent quarterly results. Still, will there be a risk of underperformance for banks?
Of course, Tanmayji. If you look at it in 2020, this I was talking about it. Am I right? Okay, all banks have been Bank Nifty. Everyone has underperformed. So if I can take you through that 1 second, Can you see my screen or not? You can. Yeah, good. Yeah. So I'm looking at the stocks in this one, and I'm looking at Bank Nifty in YTD. That is 2023. Not a single bank is in green. Can you see? Someone is down by 15-16%, someone is down by 10-11%, but the lowest has been the HDFC Bank, which is down by 5%. So every bank has taken it, despite the good numbers, despite the commentary is so good, I think they're underperforming. And they may continue to underperform. That's what my understanding is.
Okay, moving on to this next question. This is by Mr. Sunil. If our money is kept in banks like HDFC, ICICI, Kotak, is this safe? Please share your views on it.
Yes, sir. ये गलत सवाल भी मत. Your money is definitely safe. Indian banking system is strong. I can't recollect any bank which is big bank where investor deposited lost single rupee. I'm not talking about cooperative bank. So let's not get confused with the cooperative bank. In India, I can't recollect which bank basically collapsed and investors deposited lost money. Your bank is absolutely safe, not to panic. Again, Sunilji, oh, you're my namesake. Don't get panic. Your money is definitely safe as a depositor. कुछ टेंशन नहीं है. कोई टेंशन नहीं है.
Okay. Moving on to this next question, I think you made a statement about the risk management officer. Mr. Ambila has asked that if there was an officer in SVB Bank as a risk management, what was expected of him?
He would have basically ensured that what is the kind of risk that bank is taking, because chief risk officer assessment to assess what is the kind of risk we will have if someone is basically, he would have highlighted the assets liability mismatch. He would have highlighted the fact that there is a mark to market loss is happening because of we are holding a long-term US bond, which was with a low yield, and the rate of interest are moving up. He would have suggested some course corrections. That's what the job of a chief risk officer, am I right? And he would have definitely highlighted that. Unfortunately, he was not there, and hence this problem happened.
Okay, this next question by Satish. Dear Sunil, things are not far from over and it confirms that Indian market is not decoupled with international market. Let us accept this. We may witness many bad news flows in the coming months. Only relief it appears when central bank starts cutting the rates and inflation will cool off, then market might start showing some relief. Money may flow out from equity to commodities like gold and other precious metals. How do you look at the entire series of events? Do you see any light at the end of the tunnel in coming months?
Satishji, I think you missed my presentation and hence this question. I do expect market to remain a little volatile. The good silver lining is that we have a very strong central bank. The only silver lining is that we have a very strong economy, unlike in 2008. India would be among the fastest growing economies in the world. It's like this, Satishji. If you have, we have immune system in our body. If your immune systems are good, the virus attack us, am I right? And virus keep attacking us at any moment. As I speak, some virus may be attacking my body. But if my immune system is good, my immune cell will fight that virus well, and nothing will happen to me. But if my immune system is weak, the virus can have a upper hand and can make me sick, am I right? Similar with Indian economy. I think our fundamentals are very, very strong. So there will be impact. It will put the sentiment, it will impact the sentiment. But is it going to have any long-lasting impact? Answer is no. And your question about gold and other precious metals, remember, India is a price taker, not a price maker for gold, am I right? Our price is derived from the globally people move towards gold as a safe assets class. Yes, it can move up. That's a different story. But that's nothing to do with the India story or something. So just to summarize, what I mean to say is that I do expect market to remain a little volatile. I do expect maybe bank or NBFC, one or two could come under pressure in India. Is there a structural problem for India? The answer is no. Is Indian economy is going to face a lot of headwinds because of this, as you mentioned about decoupling and so on and so forth? India is going to remain very resilient and very strong. Why? Because of our reforms and so on and so forth. Fortunately, we have a government which has been able to take proactive measures. It will not going to wait for the events to take place to impact our sentiments. Am I right? They will take anything which is needed to ensure that India does not have to go through a much of a problem. Of course, impact aayega, I am not saying no, but impact would be get mitigated. That's what my sense is.
Okay, I can see a lot of investors asking your opinion on Equitas Small Finance Bank. Is it safe to hold the stock currently?
See, again, I repeat, any bank-related store or any company-related this is as per the Markets Mojo website, not for the Mojo Infinity. If you are a Mojo Infinity customer, we will tell you when to exit because it's a portfolio approach that we take. Here we are talking stock specific. As per our website, Equitas Small Finance is a buy with a score of 81. In fact, fortunately, its clip is up by 2% today as we speak.
Okay, question by Mr. RB. Can we blame the lack of close monitoring or weak regulations for the collapse in financial institutions? Why do time and again we hear instances of bank failures due to either some kind of an external fraud or scam due to incorrect decision being taken by the senior management?
See, in a hindsight, what you are saying, RB sir, is very right, that yes. But see, as I was telling you, banks across the world do fail. And I was showing you that more than 500 banks would have failed, am I right? Since 2008 crisis, if you go back to my presentation, where I did mention about how many banks collapsed and so on and so forth. If you can see this table, 140, 157, 92, 51. So वो तो होता रहता है. It's not something new. But you are right. But see, businesses are bound to fail. No business in the world can say, no industry can say that there are no failures in that industry. Am I right? वो cement होगा, steel होगा, retail होगा, FMCG होगा. People, business, if a business, some will succeed, some will not succeed. Something happens in internet also, something happened in this one. So that's a part and parcel of the life. in a hindsight, yes, our regulation should be more, because see, the problem with banks, and when banks or NBFC fail, it does have a lot of collateral damage. That doesn't happen with if any steel company has to collapse or any cement company has to collapse. Of course, there will be collateral damage, but the risk is mitigated, minimum. When banks and NBFCs collapse, the impact is much larger. In a hindsight, what we are saying is right. But see, remember, there was no fraud in this bank. I must tell you that. It is just that they took a view that rate of interest is not going to move up in US. And I don't blame them. Even the Jerome Powell himself was saying there is no need to. He in fact has said inflation is transitory. That's the word he has been using it. Now, when your Fed chairman makes a statement, then how can we blame a CEO of a bank who basically would have believed the Jerome Powell saying that if it is going to remain transitory, there will not be a hike in the rate of interest. And remember, in US, the rate of interest moved up very sharply. 450 bips has gone up, 4.5 percentage point gone up in last 12 months, which is unprecedented. And yes, that kind of error anyone can make, sir. If you ask me, even I would be in their place, I would have also made this kind of, because no one would have thought. You show me one prediction which has predicted the 450 bips rate hike होने वाला है Fed से last 12 months, but no one made that 1 year back. Am I right? So there is no fraud as such here. So I think we need to be a little fair in terms of judging someone. It is just that call on the rate of interest went haywire, and that created problem, and then that created assets liability mismatch and happen. So that's the thing. Yes, any CEO can make this kind of an error. And I think as long as this error has been made in a good faith without any malice, it should be fine.
Okay, this question by Vineet. Are we going to book losses on banking stocks that are currently mojo stocks? I'm also invested in 2-3 private banking stocks in my model portfolio.
Are we going to book losses in banking? So we have a very simple philosophy. If our IP suggests that we need to get out of that fall from high criteria or so on and so forth, we will advise you to exit Vinitji in a model portfolio. If you are holding in a personal portfolio, you ask me the model portfolio. Since you are currently investing in 2-3 private banks, please continue to hold. If at all you have to exit, we will come back to you and we will tell you when to exit from that.
Okay, I know you've cleared this point, Mr. Sunil, but there are still investors asking this. Would it cause a similar Lehman movement or something worse than this?
So, right now, no. That's what my sense is. It's not going to create that kind of panic. For some reason, if it does happen in the US, because I'm not an expert on the US banking sector, am I right? For some reason, if it happens, like what Satish was asking me, there could be some collateral damage to India also. But fortunately, this time, India is much stronger than what it was in 2008. So virus आएगा, attack करेगा, but because our immunity system is so strong, उसकी impact ज़्यादा नहीं रहेगी. That's what I'm trying to say. And remember, every day the news flow can come. You don't have a handle where would the news will come, how bad that news would be, how severe that news would be. No one has a handle. I don't have a visibility, sir. So I cannot say कि वो दूसरा element repeat होगा कि नहीं होगा. But I do believe in case if that has to happen, Indian economy is strong, our central banks is very, very strong. And even if that impact will be there, it will be more short term in nature. It's not going to happen that what we saw in 2008, when the market came down, Sensex came down from 21,000 to 9,000. Will that kind of a course will happen? The answer is no.
Okay, Shyam Sundar asked this question. Although you don't publish exact details, but it seems that you exit most of the stocks within 1 year. However, you use 1 year period to compute the value of technical dot. Is this in sync or am I missing something?
So yeah, definitely. I gave a response to that. I think my customer care department did ask me, and I did respond. I said you would have received a response to that. The first thing, let me get clarity for you. So our technical dot is not 1 year. Where did we say 1 year? It's weekly, monthly, and daily. It's a combination of that. We never made a statement. If you go to a website, sir, we said that it's so let me take you technical. There's Equities only. Can you see my screen? It's weekly, monthly, and one is a daily. That is moving averages. So where did you get that idea, sir, that we are talking about monthly or yearly? No, we don't use it, sir, monthly. So we don't use any yearly. And sir, remember, our reason to exit from a stock is not the technical, is a function of quality, valuation, CFT, and technical. Based on that, we derive the score, and based on the score, we advise you whether to remain invested or exit from that.
Okay, one of the investors asked 3 questions. Your top stock recommendations are good, but the issue is that not all stocks can be bought, and the stocks I buy have to book stop loss on that. I'm 19 years old currently, and I want a stock SIP of 3,000. Which stock should I buy for 10 to 15 years?
Sir, my request to you is that if you're going to buy a stock for 10 to 15 years, probability is very high that you would underperform. Why? Because we are living in a very dynamic world where the script and the business models are changing very fast. And what looks very exciting today may not be exciting 10, 15 years. You know, I would give a very simple study which was done. I can't recollect. And one Mukesh Ambani also made a statement. If you look at 15 years back, what are the constituents of Sensex or Nifty? And how many could survive in that 15 years period as a part of the index? You will see a lot of churn would have happened. Am I right? And the churn will be more quicker. Why? Because the technology is making a lot of businesses obsolete very fast. You know, I happened to visit Japan, and I happened to meet one senior management guru there. And he told me that Sony used to have the break-even point for any product 5 to 6 years, because that product would have a life cycle of 10-15 years. Today, no businessman can say, boss, mera break-even is 5 years or 6 years. No one is going to invest. Why? Aapka business model change hoga. People now looking at break-even point much quicker. If you are not able to make break-even in 3 years or so, probability is very high that you will never make money from that business model unless you change the DNA of your business. Show me one company in the current environment which has a business model which has not made money in 3 years is going to make money in the future. And one of the new technology stocks that we are talking about, they have a very similar fate. आपका पैसा कभी नहीं बनने वाला है. आप सोचते हो कि मैं बना दूंगा, नहीं होने वाला है वो. So I think the business models are undergoing tremendous change, and hence your period, तो आप 10-15 साल का करने वाले हो, I'm afraid you will not going to make money. My request to you, sir, is that please follow a model portfolio as a concept rather than, since you are 19 years, and tomorrow I'm going to discuss about Warren Buffett, where the power of compounding I'm going to discuss, and you'll get an idea what the power of compounding means. Even if your power compounding is little different, at the end of the longer period, the value is substantial. But that can play with you because you are just 19 years old. What was the second leg of the question, Jason?
Yeah, he's also asked the final part of the question. All the stocks of the model portfolio are at a resistance level. If there's a market correction in the market, what would happen?
So, sir, you don't have to invest in the market for 1 month, 3 months, and 6 months. Am I right? You need to invest in the equity for the long term. But I'm not advising you to hold the stock for the long term. Am I right? So we will tell you in model portfolio when to exit. And that time you need to exit. But don't bring in your human emotions, human bias, and do that. So 2 learnings for you, sir, from my side, or 2 suggestions or advice from my side. Never buy a stock for with the intention to hold that company for 10 to 15 years. The reason you bought that company, as long as the reason holds true, please remain invested in that company. The reason that why you bought that company, reason changes, you get out. Very classical example I must give you. And this example has not come from anyone else, but the legend investor of India, Rakesh Jhunjhunwala. He was the first one to identify Titan because he believed that Tanishq as a story is going to have a long-term future, and he continued to remain invested because story remained intact. At the same time, he also invested in Lupin. And he got out of Lupin. If you look at this shareholding pattern, he got out of Lupin. He had very substantial stake. Why? The reason why he bought that company is no longer holds true. Same logic, if legendary investor Rakesh Jhunjhunwala can apply that logic, why should we not apply that logic? I'll give you a classical example of Warren Buffett. It's all there in public domain, so you can search and you can find out. In third quarter of 2022, Warren Buffett increased the stake in TSMC, Taiwan Semiconductor. Google search करना है, मिल जाएगा आपको. Did you know when did he exit completely in TSMC? The fourth quarter of December 2022. One quarter में a company where he increased the stake in July to September quarter, he got out in October, December quarter, completely. If Warren Buffett can do that, why can't you do that? So for reason, you to exit, hold that company, does it continue to hold or not? If it is not, please move out of that company. So that's the way you should look at it. Yeah.
Okay, Mr. Sunil, that's about the Q&A session for today.
So, just to repeat, to summarize, we do expect more negative news to come from the US. We do expect that's going to impact the Indian market sentiment. We do expect a temporary setback to the Indian equity market. We do expect market to remain a little choppy, but that is only short term. Indian economy is doing extremely well. We have a very strong central bank governor, and hence do not panic. There is no reason for you to take out your money from the Indian banks. Deposit निकालने की कोई जरूरत नहीं है. We are Indian banks are very sound and strong, but do expect market to remain choppy. With this, thanks a lot everyone taking time out and attending this webinar. Thanks a lot Jason for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and thanks to everyone for attending today's event. As Mr. Sunil mentioned, we'll be shortly sending out invites for tomorrow's event, which is takeaways from the letter of Mr. Warren Buffett. Looking forward to seeing you all come for the event. Goodbye and have a great evening. Thank you so much.